Good afternoon. We're going to wait a couple minutes. A lot of people like to trickle in a few minutes once we get, a few minutes after. So we're going to wait a minute or two to get a couple more people in here. And then we'll get started with today's presentation on nonprofit governance. I recognize Paul being here today, and I know we have a couple people who want the recordings after the fact, so we'll send those over to them when we're done. Let me set this up so we can get started here. First off, let me introduce myself. My name is Sharon Lewis, and I'm an enrolled agent. I'm licensed by the Internal Revenue Service, but I've spent the last 20 years of my career actually serving nonprofit organizations. We provide educational support. I serve on boards. And so I've been doing this for quite a while. And serving nonprofits is something that's very important to me because of how many different ones I've either been part of or seen the benefits of. And so I like to share the knowledge that I have. And we're doing an ongoing class. We probably have 10 classes that we're going to be doing on different nonprofits. I believe this is the third or the fourth one in the series, which is guarding the mission. So let me just go over this, the go over the materials with you. If you have questions, feel free to ask. I'm happy to answer. We offer nonprofit accounting as well as everything from setup all the way through tax preparation for this, and we'll help people accordingly. So let's get started. All right. So why internal controls matter? Number one, it safeguards the nonprofit resources and mission. One of the things that I had to study when I was working on my accounting degree was, audits themselves and audit failures, and what happens when there aren't safeguards in place. And it's tragic when it happens in a nonprofit when resources are taken by employees or volunteers, and because it actually costs the organization, whether it's money or whether it's actually, not being able to provide goods or services to the people that they're serving. So safeguarding them is a key element. We've all had, things stolen throughout our life, unfortunately. So the problem is when a nonprofit does it, it's a lot harder for them to recapture those funds than it is you and I can go out and make more money. Sometimes it's not as easy for a nonprofit to, make or get donors to create more money. The other thing is prevent fraud, misuse, and compliance. Compliance is one of the big things that I see, is that when internal controls aren't in place, compliance isn't there. What compliance means is that we're adhering to what the IRS and the state require to meet tax filing and nonprofit standards. But compliance also means if you've been given a grant, that you're following what the grant writer wants done with the funds that they've entrusted to the organization. They've given it to fulfill a certain mission that your organization says that they want to, want or need to help their members or beneficiaries. But if we're not going to follow that, then that becomes an issue. Prevent fraud. I have seen, people take checks that belong to organizations. In fact, one of the nonprofits I did some work for, one of the employees had the checks from a Medicare-based agency issued to herself and not to the organization. And I don't know that they ever recuperated those checks. I just know that the CEO wasn't paying attention to it. And it was something that wasn't caught until she left her position. And so that was a problem. Having internal controls, if you can show your donors what your internal controls are, that gives them more confidence to give you larger sums of money. If I'm going to trust you with maybe $5,000 or $10,000 versus trusting you with $100,000, that's a little bit different. And knowing that that money is going to go to meeting, the mission is, if I have those controls in place and say, this is who this person is and this is what they do, this is who this person is and what they do, this is this, and you actually have it charted out for them to see, that gives them trust in the organization, and it gives the community, your community partners trust. They'll turn around and say, look at how great this organization is. They do X, Y, and Z. And we can trust them to fulfill their mission with us because they don't let us down, because their resources haven't, gone off someplace. It also strengthens transparency and accountability. Having these makes everybody on the board feel better about it. It helps the employees feel better. And I can share a couple of nightmares where they're transparent, like everything bottlenecked into one person. And then when that one person left, it made it so that people who are there are spreading rumors about that particular person. I actually happen to know her personally, so I don't think her integrity is on the line, like, but they're talking bad about her because there was no transparency, and that was one of her downfalls in that organization. So it's just one of those sad things that happens, but it makes it hard for her to protect herself, even though she did everything in her power to run the organization a certain way. The transparency lacked, and now her reputation is suffering. And we know how it is in this community when you're in nonprofits. One nonprofit in one area will talk to another nonprofit in the area. And so if somebody's name is being bad mouthed, it could hurt her from being able to find another job or to be able to go start another nonprofit, because donors are going to know about it, because those people that donate that kind of money at times actually talk to each other. So it's important for us to have those. Common risks for nonprofits. And this is one that I'm seeing right now with a nonprofit that I serve on, is lack of segregation of duties. Segregation means that, this person over here is responsible for receiving all the monies that come in, the checks and stuff like that. This person's the one that runs those deposits to the bank. Then those receipts are actually looked at and compared to each other so that we can see, but two different people are doing those jobs. It's not one person doing that job. Whoever writes the checks isn't the signer of the checks. Whoever manages the bank account and reconciles the bank account isn't the one writing the checks. And so having those different segregations prevents things. Also, if someone's doing, let's just say you're doing food boxes, knowing the number of food boxes that are supposed to go out based on the number of orders, and then somebody verifying at the end of the day how many orders went out, that makes sure that the volunteers didn't all just go walk off with a food box that they may not have been qualified for. Cash handling is one of the biggest vulnerabilities, because we'll see cash, whether it's actual cash itself or whether it's checks, walking out the door in different ways, and that is a problem. So having two people who handle that is up and foremost. And then grant misuse. Give you an example, a real life example. One of the nonprofits I was with had money donated to them for grants for the students that they service. And the person who manages the organization went and bought the computers for the youth that they service. Well, one of the executives turned around and said, well, just buy the team leads that run all the programs for them, computers with that same money. And it's like, no, it was for the youth that we serve. And there was an argument between the board members about that. Well, here's the problem: is the grant has to be reported back that we spent this money accordingly. And you're normally saying that, signing on the bottom line that, you spent this accordingly, and here's the proof if you want to audit us for it. That causes a problem. The other thing is inaccurate reporting. And reporting is one of these things that I'm one of the believers that you should be doing your books on on a monthly or every couple week basis, depending on the size of your organization, to make sure that you remember what's going on. Because sometimes transactions, if it's 2 to 3 months, you might not know what this particular thing was for. You might have a receipt and it says this, but what did you actually use it for? Was it this event? Was it that event? And again, it depends on the size of your organization. But some of the organizations I deal with have, 5 to 6 events a month. Other organizations have, one every quarter. So it depends on how much money you're dealing with. We've dealt with organizations that have, $20,000 in revenue and organizations that have over $4 million in revenue. So when you have 4 million in revenue, what happened today, or recalling today what happened 6 months ago might be impossible, because there's just so much activity that goes on when you're providing, daily activity for members, in that. The other thing that's super important is, cybersecurity threats. And cybersecurity can happen on the simplest way. To give you an example, a couple days ago, my cousin went to get onto his insurance provider. He's with Geico. Wanted to go in there, change his insurance policy, and he clicked on Geico spelled with 2 O's instead of O. They actually got into his account and actually started making changes to his insurance policy. Well, that's a personal cybersecurity threat. Just imagine if somebody did that on your system, clicked on something and got in. Now they can turn around and take your money. They can have access to your accounts. They can have access to your donors. Letters can go out to your donors that say you're in desperate need because some cyber person got in there or some hacker got in there and actually attacked your donors. And these are things to think of, to have specific programs and protocols in place and operating procedures so that employees don't do those things on your computers. Fortunately, my cousin did his thing on his cell phone and not on a work computer or anything like that. But just imagine the level of threat that could have been there. The good news is he was able to shut it down within a minute. He saw what had happened, saw that it was a problem, and then was able to get it rectified. But by the time an employee lets people know, sometimes it's too late. Sometimes by the time they've reached the higher level of chain of command to get it fixed, the hacker's already gotten the data, because it takes seconds for some of these worms. Or if they do the right type of worm, they can get into your system and they've been there for months before you ever realize that they've actually managed to get through the data they want. So having the right procedures in place and having the right oversight involved will help prevent these things from happening. So core controls that every nonprofit needs is segregation of duties. Now, if your nonprofit only has a couple people on board, it's a lot easier, or it's a lot harder to segregate duties, because, maybe there's only 2 of you and one of you lives here and one of you lives, in, 20 miles away. It's a lot harder for one person to, I'm going to come down here and take the bank deposits because you opened up the mail. That's a little bit harder. But when you have larger organizations and you're dealing with larger amounts of funding, it's much more important that you have different people doing different jobs. As I said, you should have, whoever signs the checks isn't the one that issues the payments for the payables. The one that authorizes approval of the payments isn't the one that's writing the checks. Those are things that are super important. The other thing is regularly reconciling bank accounts. And this is one that we see all the time, is that a lot of nonprofits don't reconcile their bank accounts. They're relying on the bank input from the auto bank feeds and thinking that the AI models are enough to catch those things. Well, that's not the case, because what's happening is, if a transaction comes in through the bank, it gets reconciled into your books, and nobody's looking at that. These transactions are being coded to what the AI is determined. And then without a cross reconciliation of this, you don't know if there's transactions that are being posted incorrectly or not being posted. And maybe they don't match with what you've put in there, because I could write a check today for $2,000 and somebody changed that 2 to an 8, and then the bank goes and cashes it. Well, if I have that kind of money in my nonprofit's account, I've just lost $8,000, but I wasn't able to catch it until months later because I never bothered to reconcile my account. And so those are the things that reconciling and monitoring really helps out with. Uh, the other thing regular reconciliation helps with is if somebody gets a hold of checks or can create checks with a different, same account number, but with different coding, check numbers on them. If you know you're writing the checks out of the 2000 series, and all of a sudden there's checks that pop up in the 5000 series, you know that someone's cloned your checks and are writing them across town, and that you have some serious violations going on there because you're losing money off these checks. Was it an employee who stole the checks out of the back of the checkbook? Was it uh, somebody authorized or unauthorized? Is it somebody who's cloned it? These are things to look for. But if nobody's paying attention to that, or if all the key people in the company or in the nonprofit can write checks, then how do you know what numbers are supposed to be going out, and how do you know what's supposed to be being paid for? Because there's no accounting department or nobody signed to segregate those duties, then that becomes a problem. All payables should come out from one particular person. Whoever signs the checks is a separate person. Those are the things that are important. Documentation and audit trails. This is a huge one. One of the things that I actually love inside of some of the new online versions of accounting software, QuickBooks Online does this, is I can actually take documentation and attach it to a transaction. So that if I'm audited, whether it be an IRS by the IRS, or if I select to have an outside company come in and audit me, a CPA firm, or audit me for grant I have the documentation right there. And that is super important to have that documentation. Give you an example, one of the nonprofits, she was buying a lot of stuff for their organization from OfferUp. A couch would be available and they would need a couch for their clubhouse room. So they would go and buy a sofa, a used leather sofa for that room. And, it was great. They would find used desks that would meet, the needs for one of their things. So they would go buy that, filing cabinets, and storage containers, storage lockers. They buy all that stuff on OfferUp. They had an auditor come in, and he turned around and said that that was theft of all the company money, and there was about $10,000 worth of miscellaneous purchase through OfferUp. And he turned around and said it is theft, and she's been written up by the organization for stealing $10,000, even though they had talked about it, but there was no documentation. Now, there is a way to create documentation in OfferUp because you're paying through an electronic transfer. You upload that into your QuickBooks and you've got it, or you print it off and save it as a PDF, or if you're using paper files, save it as that way. But having that documentation there and attaching it to your QuickBooks or your Zero or your Shade, not Shade, come on, Sage. Your Sage account is important because that documentation's right there. And if anybody asks for it, it's not something someone has to look for. Having that is super important because, as I said, it could be you losing your job if you're a hired member of a nonprofit versus having to have to go look high and low for documentation during an audit. Nobody wants to do that. The other thing is having board oversight and governance. One of the nonprofits I was with, they had board meetings once a year, but they were a large organization dealing with over $1 million in revenue. But the board trusted the person who was running the organization and didn't worry about it. Well, that actually is in violation of what their bylaw stated. And the president and CEO never bothered to turn around and ask for the board meetings. The other board members didn't care because they're busy professionals. And so that became a problem. And again, there was no oversight, and things happened that cost the organization money because they didn't have the controls necessary. The board wasn't looking at any of these things. Or one person on the board, maybe the president had final say on everything. He or she looked at everything. That one person had final say. Well, if that person isn't paying complete attention because their eyes are diverted someplace else because they're working on some other project or something within the organization, and a couple months go by, how do you know what's really going on if the rest of the board isn't getting to see what's happening. Having actual financial statements that the board can look at monthly or quarterly, depending on the volume of funds going through, is important for the internal controls to make sure money is not leaving. Um, that's super important. So I've given you some examples here, but let's just go through them again. Segregation of duties. One person approves the expenses. Another one issues payment. The board and treasurer review the reports monthly or quarterly to make sure. This reduces the risk and improves accountability. One of the nonprofits that I did their tax return a couple weeks ago, and the CEO has not looked at the financial statements. They were sent to her. Well, it turns out that items that were counted, or certain transactions that were counted one way are actually supposed to be counted another way. And this has to do with something on the higher end of the accounting spectrum. But now we're having to have to redo the books. And in me doing research on what they were actually doing, it was overstating their earnings by $9,000. And so it's like, wait, and that's a significant amount. It also means that now my time is being doubled because I have to go back and help them make the changes to the books that they need to because something was coded incorrectly. And this could have all been caught if the CEO had actually been paying attention and looking to the books like she was supposed to be doing. And instead, we've done the tax return, and now we're going to actually get to redo the tax return. And it's not just one changes, it's probably like 6 or 7 lines, on a tax return. Well, that's frustrating for everybody involved. The bookkeeper's a little upset. I'm a little upset. And the CEO is going, why can't you guys get this right? And we're going, why didn't you look at this a couple of weeks ago when we originally submitted the first set of documentation or the first draft of the tax return? Now we're having to have to change it. So, this causes a problem and creates friction within the organization. And that's not how an organization runs smoothly. When we have good governance and good internal controls, it improves accountability and it improves communication because those things are being discussed about, and it doesn't build up to a head where we're trying to get something done against a timeline based on when a return is due and what have you. And now we're sitting here, having to have to scramble, and it's frustrating for people. And then we're still worried about what happened to, was this should have been accounted for this way or should have been accounted for that way. All right. The other thing is it's really important is to build a culture of accountability. And what happens is this is set from leadership at the top. Um, I've been part of an organization where I've actually seen the leaders of the organization not be truthful. Have you ever worked for a place where it's going under and the employer's going, no, everything's great. And yet you're sitting there going, yeah, I don't think everything's great because of all the hush secrets over there and this, that, and the other thing. Well, that tone slips out. And, you know, um, people in nonprofits that are the bottleneck, that creates a lot of friction for the staff that's waiting on information or waiting on payments or waiting on clearance for different things or waiting on final approval. If only one person versus a group of people can do things, that creates a problem. But the other thing is how the leader approaches accountability and being, projecting that we're here, we're going to offer transparency. We're here to make, our job is to help the people that we serve, but also my job as the leader of the organization is to, be accountable to the people that we're serving, as well as you guys being accountable to me if you're the employees there. The other thing is accountability helps with conflict of interest. Having, if you have your brother Fred who does this, that, and the other thing, that might not be in the best interest of the organization because did you get 3 bids on what Fred's doing? Fred might be a great guy and he may be giving you the best value for the deal, or maybe Fred's overcharging you and you're letting Fred do that and he's taking money. One of the things is that I've seen is somebody on the board who does something wrong within the organization threaten the employees that I'll have your job if you tell the other board members the truth. Or if you put this in your report, I'll tell, I'll tell them and you won't have a job anymore. Well, that's a problem. And then what happens to that, that employee that comes and tells the board member? Are they going to have retaliation? Are they going to be willing to say what's going on that's not, not in the best interest? The other thing is a culture of accountability is expense reimbursement. Um, I see a lot of, I'm just going to put this on the company card. I'll put this on the company card. I'll put this on the company card. But when these things should actually be items that are reimbursed if it's approved by the company. It's not up to the individual to decide whether or not it's something that's approvable unless they've already been given, okay, this is what the guidelines are. But having that in place, is important. Having a reimbursement procedure and policy in place. I actually, in my office, ask my employees to do expense reimbursements. In fact, I have one here on my desk today that I need to have done. I should probably take it out of my little book that I did this morning. But I will actually submit a reimbursement form because I accidentally grabbed my personal credit card and paid for something today. So it's like, oh, I want to be reimbursed for that. And we do payroll in a couple of days. So this way I'll submit my form and get paid for that. The other thing is train your staff. Train your staff and your volunteers and have an operating procedures for it. Because then what happens is people know what's expected of them and people feel more responsive to an organization where they've been given the training that they need. Sometimes when we bring somebody on board, we're just throwing them to the sink or swim. We're in the middle of this, this fundraising event. We're in the middle of this. Here, come help me do that. Here, come help me do that. But if we actually are going to bring somebody on board, especially for its staff, having the right, materials in place, having the protocols, having a employee handbook, having employment contracts if the industry has contracts. I recommend it even if it's just for an office. This is what is expected of you. Our employees work from 8:30 to 5. You get an hour for lunch. You get a half hour for lunch. You're expected to answer the phone a certain way. You're expected to wear, professional attire, or we don't care what you wear. You can work from home. You can't work from home. All those things. If you give that guidance to people, they feel more respected and they'll also respect the organization more. And that comes back to if an employee doesn't have a reason to steal from you or actually feels guilty about it, they're less likely to succumb to the pressure to steal. Now, some people are just bad eggs and they're going to take it no matter what. But if we give them less of a reason that I've always been treated well by this employer, I can't do that, then that's a different thing. And remember, board engagement and oversight is key. Right now, as I said, I'm dealing with a couple of boards where I've seen lots and lots of things go wrong. One, not having board meetings on a regular basis, not reconciling the bank account, and the board has never stepped in and done anything about it. And then when things went wrong, things went really wrong. They've lost a government contract. They've lost some different things. Well, they're providing things to the homeless community. So losing government contracts means that they're not going to be able to provide for immediate needs for people who, are in dire straits. And, I can only make recommendations. I don't serve on all the boards for the businesses that we consult with, but I do make recommendations, and organizations need to follow them to be able to meet the standards that are set forth in the nonprofit industry. Oversight is always important. Having multiple people review employees and they just don't report to just one employee, because I might lose my temper today and turn around and say, you're fired. But is that in the best interest of the organization? Maybe I lost my temper over a mistake that was made. And then someone else goes, they're a human being and this, that, and the other thing. And you're like, oh, I didn't know that. So having those people in place will protect the organization. Because the other thing too is I fire somebody from my nonprofit today. How do I know what they're going to walk out the door with or what they're not going to have people help them walk out the door with because of how things were handled? So having having protocols in place for even the terminating of people and having oversight in place is super important because I might react differently today than I did yesterday to something. And you see that within organizations, sadly. All right, what's next on here? Action plans for nonprofits. So, number one, if your nonprofit has different people doing different jobs, or doesn't have different people doing different jobs, let's separate that. If you have enough people on staff, we want to separate those duties. But let's just say that you're a small organization and you don't have multiple people. Have the SOPs written as if you do, and then just state at this point in time, because there aren't people in place, this is how it's going to fall, and that this ties into this, and that you have things documented. Because having that documentation, even though you don't have lots of people involved, shows the community that you're serving or the agencies that might be making contributions to you that these are your protocols already lined up. Update your policies and procedures. Today we're using this software. Next year we're using this software. Update your policies and procedures. Make sure that those things are changing. We had a situation a couple of weeks ago where I was talking to an organization. They had their employees signing in off of 3 different systems. And when a complaint came to be, the CEO was saying that, oh, they're working off of an old system. Well, that doesn't make anybody look good. I mean, the organization looks foolish by saying, well, we have them using the old system. We didn't update it. Seriously? You know, just not, especially when you just onboarded a whole bunch of new staff because you know, yeah, it just doesn't make you look good to the staff. And that's the important thing. We want to make sure that both the employees that are working for us and the communities that we serve, enjoy the organization enough that they're going to put forth 100%, but we're also going to give back because governance is about protecting the organization. But if there's bad feelings within an organization, then those come across into the lifeblood of the organization and affect the overall mindset of the organization. An unhealthy mindset leads to, bad behavior amongst, members and staff and employees. So we want to curtail that. Believe it or not, I think a lot of the service work that happens in nonprofits has a lot to do with mindset and keeping things, that because serving a community that needs help might not always be the happiest of positions. A lot of organizations are dealing with, underprivileged people, underprivileged animals, people that, are outside the social norm, people who need additional services, you know, um, health concerns, all sorts of different things. So we're already dealing with something that could be stressful as it is. I don't know any nonprofits for happiness that are only dealing with happy people, but I would be interested in working for them. But a lot of times we're dealing with people that are struggling in some way. So coming in with a culture of positivity and having the governance in place helps set the tune to help people fulfill the mission of the organization better. The other thing is conduct monthly reconciliations. That means your credit cards. That means the loan payments. That means the bank account, Oh, and the other thing to me, this is a big, big pet peeve of mine. If your organization has over $250,000 in the bank, you need to have multiple bank accounts at different banks. The FDIC only insures up to $250,000. So if Bank on the Corner fails and you had $252,000 in it, yeah, 252,000, I'm sorry, let me rephrase that. If you had over $250,000 in it, say you had 300,000 and they fail, you're only going to get from the FDIC 250,000. You're going, but wait, we had 300,000. The FDIC says, too bad, so sad, you should have moved that other 50,000 to another bank. And so you're out that money. And I have actually been part of a bank failure where my father-in-law had more money in the bank than he was supposed to. The bank failed and he lost, anything over the FDIC insurance limit. So that was his business and his money, but I actually got to witness it for him and deal, and deal with him as that was going on when that mistake happened. We've already had a couple of bank fails in the last couple of years, so it happens. Whether or not we realize it or not, we don't know. And no bank is too big to fail, because Lehman Brothers was one of the largest banks and it failed during the recession. So keep that in mind. But conducting bank reconciliations is important, making sure you know what's coming in and out of the bank. Provide board training, and then see to it that the board training is followed and implemented. You can turn around and train people to do things, but if they actually don't do them, that's great. That becomes a problem for people, and a board member might feel like, well, I'm the board, I can do what I want. I'm the board, I can do what I want. You can't. You're held accountable to the same level. You want to make sure that they're trained and it's documented what the training is, so that everybody's protected. Having a written training documentation plan for your board members is important, because that also helps make the organization appear stronger within the community, and say, oh, we do board training every time a new member comes on board. They spend, an hour with the president going over this. Then they'll meet with the person whose position they're replacing on the organization, whether it's, they're an executive position or just a general board member. But having that training in place and having that one-to-one time builds stronger boards, builds a stronger community within inside the organization, and make sure people know what their job duties are within the organization itself. The other thing is strengthen IT and data safeguards. Seriously, have a cyber policy for the organization in place. You want to make sure that your donor names, addresses, and bank information, if you have any of that, is secure. Don't share the same account. So if you're using, let's say you're using QuickBooks Online, don't be sharing your password with me for your account and vice versa. Get me my own account on yours. You get your own account. Your, second in command has their own account, and you can go in and do things. That helps with a couple of things. Number one, it gives an audit trail. So inside bookkeeping software, we can see who made different transactions. So that's super important. But also it helps strengthen the controls within the bank accounts, or within the bookkeeping system, so that things aren't misappropriated. I can't say that these checks written to ABC Storage was actually computer support for storage, when in fact ABC Storage, my last name is Sharon Storage, and so or Anna Storage, and I just wrote those checks to myself. So you want to look for things like that. I've actually seen that type of fraud happen when I worked one of my first accounting jobs. The woman who did accounts payable before me, she wrote checks out she abbreviated the company's name. And so she took the first two letters and then just shortened it, and then set up bank accounts in those companies' names for their major vendors, and embezzled out over $100,000. So it's like, you're just sitting here. So they didn't have the right internal controls, or she actually just had the owner sign the checks, and she eventually figured out how to do a signature. So then she started just signing the checks. And how they finally found out was when the vendors were complaining they hadn't been paid. A few months had gone by, and she had gotten away with it, and was able to walk off with $100,000 before she was caught. Have data safeguards in place too. Protect your data, have a secure online. We're switching a lot of things over in our industry to two-party authentication, just like your banks do. It is a pain. I can tell you from, my staff complains all the time about two-party authentication. And then of course it's always a temptation, because you're, waiting for a text on your phone. So now we've gone and played with our phone for 5 minutes. So, I'm not thrilled with some of that portion of it, but having data safeguards in place, making sure that not everybody has access, that you're not writing your passwords on the bottom of your keyboard and stuff like that, and using something like LastPass or Password Keeper is important, because that protects it, and using strong passwords to protect it. They're saying the new strong passwords are actually phrases instead of like a word, because the longer it is, the harder it is for somebody to crack it. So I remember somebody years ago telling me that, her username for something was "I love scones." And so, yeah, I think that would take a while for, a system to crack. So just make sure you have the right safeguards in place, correct passwords, having a cyber plan, and then making sure your IT is strong and that you've got a relationship with an IT security company that can help you monitor those things, and that you're running the little patches that Windows pop up with, or if you're using Apple, that when they have that little thing that says update needed, that you're running those updates, because they're constantly catching different ways that, criminals can hack into your system. Make sure you're running those on a regular basis. So key takeaways for you. Number one, internal controls protect your mission as much as your money. You need to have a strong governance inside and build trust and sustainability. Trust from the board all the way down to the employees is super important. The members that you're servicing need to be able to trust you. And you need to make sure that if you separate out controls and there's transparency on who does what, it protects everybody in case something goes wrong. Reputations are saved by having transparency and having that governance in place. If you don't have it, I see professionals all the time losing, what was important to them. Every nonprofit, no matter how big or small, can implement safeguards. As I said, if you're a small nonprofit, even if you just turn around and start with the simple SOP, maybe it's 2 of you, maybe it's 4 of you, maybe it's just 1 of you, having that in place. I don't recommend a 1-person nonprofit though, because if you fall off the planet, all that money's tied up and it goes away and nobody can access it. So I always recommend having a board. And the other thing too is having a bigger board. A lot of people are like, oh my God, I lose control because we have all these people in place. It's actually not that way. What happens is that you have more people that you can share your ideas with. Those people can go out and spread that idea with the broader community. And that brings the organization to reach more people, because I might know 100 people, you might know 100 people. Well, we only know 200 together. But what if we talk to, 4 more people and bring them on the board? Now where there's a total of 6 of us. Well, they each know 100. Oh, wait, this person here, she's a connector. She knows 400 people. Now we have 1,000 people that we can talk to about what we want to do. And on top of that, now a project that just 2 of us would be doing, now we have 6 people who are able to do it. How much more work can be done, or services can be provided more quickly because we have 6 people versus 2 doing it. So, but you can't put all those people on board unless you have the practical safeguards in place to protect the organization and the members. The other thing too is having the right insurance in place. And I should have added that. I was talking to an insurance agent today about some concerns I had, and about an organization that I think might be underinsured. And, making sure that if you have employees, that you have the right type of insurance on the employees in case a threat or a concern is ever made about, something that's not okay, whether it be, sexual, whether it be, abuse, anything like that. Having that insurance in place protects the organization. And that too, to me, is governance, making sure that the management decides what's best for the organization and everybody's protected. Those are one of those things that I think falls into that. Right now, in my opinion, you should be acting now to review and strengthen your internal controls, making sure that your organization has what it needs, because hopefully your organization is continuing to grow. If you catch it now when you say, wait, we might not have this, and then plan for it. Maybe it takes you a couple months to put SOPs in place. Maybe it takes a couple of months to get the right insurances in place. We know hiring people isn't something that happens today, so we know sometimes it takes extra time. Well, the same thing with building controls for the organization. Having the right governance and internal controls is important, but you need to continuously strengthen and build those systems for the organization's strength. That's how organizations fail, is when they don't have internal controls. The biggest problem is most nonprofits fail within 5 years. It's just like businesses. So the way to make sure that they don't fail is by having controls in place so that there's not infighting, there's not, theft of information, there's not theft of knowledge, there's not theft of money. And those controls are in place to keep the organization intact, and that we're spreading goodwill throughout the community that we're serving. All right. If you have any questions on your nonprofit or how LBS Tax can help, we do consulting for nonprofits. We're actually coming up with this entire nonprofit workshop in a series that should be available, I'm hoping, by December. It's a little bit slow for me to put all these videos together, but I'm working on it for everybody. And then if there's anything you specifically want to hear about, maybe you want a presentation on something, let me know. We can see if we can put that in. We're trying to do 2 presentations a month. And we want to have these available for people to review, because we think knowledge is power, and having power to make sure you have the right decisions for your organization makes you a stronger organization. So thank you very much for being here. Are there any questions today?
No, Sharon, can you hear me?
I can, Paul. How are you?
I'm fine. How are you doing?
I'm good, thank you.
It's good. It was like being in my audit class back in college, like a review for the test going through this. It was fun. Um, yeah, did Paul talk to you yet?
He did. I will get back to you offline. Um,
Okay.
and give you the answers to your questions. But the first answer is the large 1023. You don't get the easy, sir.
Okay. We're gonna have to, like get together or something. We can talk about it, but I want to get this thing done right the first time. I don't want to jerk around with the IRS too much here. So
I understand. I was telling Paul I did one of those. I did a 1023 last week. So it's like a bicycle for me. I just get up and okay, go through the 150
yep,
questions. That's what I feel like it is sometimes.
yeah,
And
yeah. Well,
believe it or not, they have simplified it as compared to what it was like 5 years ago.
okay. And again, I can go through exactly what I've got gone to set up the 501(c)(3). We can chat later on that.
Okay. All right, that sounds good. We'll definitely get something put together for you, and we'll start working on that 1023 for you.
Okay, sounds good.
All right. All right. Well, then thank you very much for your attendance today. I appreciate you being here, and you guys have a wonderful day.